Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Wednesday, June 9th, 2021. What I'm going to cover is mainly two sectors I've been eyeing closely lately, and that's the industrials and financials. I'm going to start out here with the S&P 500. Nothing's changed on that. We're pretty much flat today. I don't know if you can make it out there in the corner. That's a 0.15% gain, which is, again, virtually flat. So no change from the last update. We had this little divergent high right here, little correction, second divergent high, been bouncing around this range right here, or that resistance level, and we still have the divergence we had in place yesterday. But we're going to focus on the daily charts, and then two of the sectors in the S&P 500 today, industrials and financials. And I'm really going to hyper focus on the financials. This is big picture. This is the S&P 500, multiple trend lines, but most recently we had this trend line right here, and I'm going to zoom in. So that purple trend line comes in right here, and that's off the lows from last year, the key lows in 2020, in March of 2020, and so we had it, support, like any other trend line, support. Right there, it broke down, it back tested, as recently highlighted, and we're below. We're slightly above the breakdown point, but we're still below the trend line, and that divergence has only gotten steeper since then. So, it's been, again, if there's one word to give this market for the last 6+ months, it's extremely resilient. Volatility has calmed down. We had a couple pretty good corrections here along the way, but recently we've just been locked in this trading range here. You can see for the last few weeks. Now, again, the point of that is, or this video is more so to try to guess where the S&P 500 is going by looking at its components. And I've talked on this quite a bit. We know tech's been lagging. The Nasdaq 100, which is tech heavy, is still off highs set way back months ago. The S&P 500 is flirting with its highs, but we're going to focus today on industrials. And I'm not going to go through the individual components here. I will in a separate video. Or in some chart screenshots I'll post for individual trade ideas. But I did want to mention it's far from impulsive, but we are below that trend line. I've been waiting for this sector and the financials to break down because, as I said, the S&P 500 won't go anywhere without them on the downside, even though tech has been lagging. Now, let me just say this before I get into the charts real deeply. There is a possibility, and I feel strong on the correction right now. I think that the industrials and especially the financials are, at this point in time, finally objective short entries and have the most promising profit potential on the downside of the sectors in the S&P 500 or up there. And so again, as I'm about to get in the video, I'll show you. I'll make the case why I think the financials drop. We'll give you trade ideas on the sector ETFs, several of them. And I want to say this, that if there's always possibilities that we get these breakdowns and some additional evidence, some additional sell signals in the financials, and we do get a correction there. And one potential bullish scenario is that the tech picks up the baton. In other words, the financials and industrials, which have been holding up the S&P 500 in recent months, maybe it's sector rotation now, and they take a breather, they consolidate or correct, and tech money starts flowing back into tech. Now, that's going to be healthy overall for the market. I always say stocks can correct in one of two ways, either down in price or sideways in time. And so for the most part, if you take a look at both the Nasdaq 100, S&P 500, it's been just a mostly sideways correction now. This is XLI up top, but and so that is one potential scenario. However, we'll see. We'll have to monitor that. And with that being said, it is, I believe, and it has been a stock picker's market for the first time in a while. There are certain markets that everything goes up, and that's what's the reinflation trade after the drop in the COVID lows when the Fed came in with nuclear options. Just about anything with a ticker went up for that reason. And now, and I think others have seen this too, I've read articles that believe it'll be more of a stock picker's market going forward now. It's going to be very, it's not going to be an easy run just tucking all your money away in an S&P 500 index fund anymore. All right, back to the point of the video here. Again, there's the primary uptrend line. It is not an impulsive breakdown. I'm going to say that right now. It's not ideally what I want to see. We've limped below there, but it is the first. Yesterday we closed below the trend line just by a hair, and you can see that tiny candle there, and that far from a confirmed or solid sell signal. But we're trading again below it, and we're below yesterday's lows. So this is what I'm watching. As I always like to say, the redder the better. If we can get a pretty good dump today later in the day and close solidly below the trend line, well, guess what? That's going to give me a check mark. Right now, you can call it a check mark, but with a big question mark, because this is a daily time frame, and anything can happen. You can have a stick save, meaning that they rally it in the close to close back on or above the trend line. But as of now, it's a check mark with a question mark, and if we can get farther away from that trend line, either today or in the next week or so, then that question mark goes away, and that is a sell signal for me, at least on the industrials. I'm going to add one little level here. I do see some minor support right there, and these are potential targets. Now let me move over to the financials, because that one I think will have as big or especially an equal impact if both the financials and industrials break down. And that's it. This is what I've been waiting for a while. Now my trend line on the financials doesn't come off the March of 2020 lows. It comes off the late October lows right here in XLF. But it's still a nice trend line. We have, by that I mean a lot of distinct reactions back there. Of course, the initial right there, a nice reaction there, several reactions there, and most recently a lot of reactions. And we zoom in nice and tight. We had a breakdown yesterday. It wasn't very impulsive. That's why I wanted to see what happened today before doing this video. And so far, so good, because we have another red day in the financials. And again, it's not ideal. I like to see impulsive selling after a breakdown. And like I said, with the industrials as well, the further away we get from that trend line, the more I'll have confidence that we have a sell signal. Right now, call it a question mark, and I'm also going to go through a few individual charts and show you what to watch. But here's I just want to start out early in the video and give you some downside targets for those of you interested in maybe whether you want to take financials as a pure play short, whether you want to stay long other stocks or your portfolio, maybe even have an S&P 500 index fund or some other type of index fund, and you want to sort of hedge your bets. And the way you can do that is by going short the most bearish looking sectors. It makes no sense to be long the S&P 500 and then short SPY or buy a S&P 500 inverse ETF. It's a one-to-one wash. You're the only person making money in that trade is your broker. So, again, by being long, if you were, say, well-diversified portfolio in the market, and then short the most bearish sectors or individual stocks, then you have the chance to outperform the market. And what that means is outperform the market. Sometimes your S&P 500 index fund might drop, but if you're short the most bearish sectors and they drop more, and maybe you're long the most bullish stocks and or sectors, overall you are outperforming the market. You're either falling less than the market's falling, or you're going up more than the market's going up. All right, so that's it. There's your targets. Let me read them out. I'm sorry about that. I know sometimes these numbers might be a little small. 35, and remember, these are actual resistance level. I didn't put the equal sign, so that means I haven't adjusted these targets. I always like to cover a little bit above the actual support level if I'm on a short trade, so I'm going to just give you the raw support levels, and that's 35.33, T2 at 32.83, and then T3 at 31.35. If things get ugly, maybe we'll see some more. And again, I'm about to roll into some of these stocks to watch that will further give me some additional check marks. But that is one option. Now, if you don't short, I get that. You maybe don't have a margin account, you're not comfortable shorting, don't know how to short, or you're maybe in an IRA or something like that. And if that is the case, then you can go with SKF. That's a 2-time leverage short. So you do have some leverage in there, and these are potential targets. I'll probably have to sharpen my pencil and hone down, but you can see there's a nice downtrend line in play. We haven't broken above that downtrend line, but remember, with these inverse ETFs, you have some price decay over time. where the charts, you're going to actually get a distortion in the chart. So I much prefer to go by XLF, the non-leveraged sector ETF for the financials when charting. But if you want some targets here, there it is. And so I want to give you an idea of how much the gain potential is. And keep in mind, 2-time leverage means ideally you take down half a position. You either short, let's say 10,000 in XLF if that's your number, your average position size, or you buy 5,000 in SKF because you have 2 times leverage, 200% leverage. But that would be about 11% gain to that first target at 1079, about almost a 20%, 19% gain to the second target around 1158, and then right now this is the only one I have. I might add additional targets, about 26% up to 1232. If you want to juice it up even more, you can go to FAZ, buy that, and it's 3-time leverage, 3 times short the financial sector. All right, so back to XLF, and I'm just going to rifle through a few of the components real quick, and this is what I like to do. Like I said, these sell signals right now have a bit of a question mark. I feel confident enough to start taking a position now. Let me just say that. Not an all-in, not a heavy position due to the resiliency in the broad market and the trend there. However, I think it makes sense now to get in early and maybe layer into that position if and as we get additional bearish evidence, in other words, sell signals, which I'm about to cover right now. JP Morgan. So I'm just going to say yay or nay as far as sell signals. No, work to be done. This is a trend line I'm watching right now, but there's a common theme. These are the big financials. Remember, I'm going through these right now in order of a market cap. So the bigger they are, the more of an impact they're going to have on the sector. JPM has been putting in a big divergent high. We had one here, and I highlighted these back here, and we had a correction. We went on to hit support and bounce and put in a larger divergent high. So this is a pretty big divergent high, meaning it started at this point and has only grown larger, and therefore that indicates a pretty large correction. Bottom line, where's this one going? At bare minimum, I think my first target 146.48, then 141.12, and quite likely before all said and done, all the way back down to this trend line here. Now that uptrend line is going to come in, at a different point in time in the future. But again, let's just say right now this would be my max target at this point in time, 141.12, and that would be a drop of about 13%, 13 or so percent. And that gives you an idea of how much the S&P might fall roughly. And that first target's about a 10.5% drop. But we need to break this trend line. So this one, work to be done. So I'm going to say no check mark there, but a very, a bearish pattern. But again, divergences can continue to build for some time. And sometimes they get burned through and they never play out. So like I said, I would feel better if I had a solid sell signal on JP Morgan. I'm going to give you one other support level to watch right here. I just noticed about 157. That should do the trick when that breaks. BAC walking the line right now. So while JP Morgan was a lot closer, a lot more above their trend line there, this one's right on the. Actually, it's just cracked. So there's my uptrend line, comes off the late October lows, just cracking right now. And again, not any type of waterfall sell-off because some of these stocks are holding up. So it's close enough that they could get a stick save. But the more they get below today's low right there of 42.11, the more confidence I have of a sell signal on Bank of America. But you want to call it what it is at this point in time. It's down 0.61%. That is a sell signal. Would certainly be help to solidify that if we get a solid close below the line there as well. But with that being said, that's a breakdown as of this point in time. Berkshire, one of the better looking ones, needs to take out this trend line. So here's one still comfortably above the trend line. Where is it going? At least I have a first target at 266.10 and then this uptrend line right here. But work to be done. So no check mark on that one. But again, divergence is building. Doesn't mean it can't go down, just means I don't have a clear sell signal on it. That's all I'm trying to say. It needs to break support. Wells Fargo, nice clean up trend line. Look at that. This one broke down. So far it's a slow roll. We have quite a few breaking down. And the way this works, if I go over, let's say, the top 2 dozen stocks in the sector, and I have sell signals on, let's say, 15 or 20 of those, that to me is good enough. That's it gives me a high degree of confidence. If I go through the top 20 or 2 dozen or so and I only have sell signals on 4 or 5, you might want a little additional evidence. But this one is another check mark. This one's below trend, broke down here recently. Back tested, it's been moving lower. First target 43.59. I'll have to add I'll put an additional target somewhere in here right around this level, about there. And but either way, that's another sell signal in one of the big financials, or breakdown under trend. Morgan Stanley MS needs to take out this trend line, so no check mark there yet. Minimum targets are this uptrend line, the purple one, and then that $76 support level. After that, about 67 next target. Citigroup breakdown yesterday, pretty impulsive, and another red day right now. And again, the redder the better. So you're seeing, several of these big leading financials breaking down. Others that haven't yet, although they have a bearish technical posture. So I'm calling this maybe an early sell signal again, like a little bit of a question mark. But I have enough confidence to say I think it's objective to take at least a small position, unless you're not a very aggressive trader. Then hold off and wait for the additional confirmation. Charles Schwab, SCHW, right on the line. Look at that beautiful trend line right there. A lot of reactions recently, and right on the line right now. No sell signal yet, but if we get one, first target's about 69, then next target about 61.60, and if things get ugly all the way, I'll call it all the way back here down to about 51.64, and maybe even that longer term uptrend line right there. BlackRock, that's what it looks like, right on the line right now, so no sell signal yet. So you get the point. I'm not going to go through each and every one of them, but a lot of these, again, Goldman Sachs, right on the line. So for those that I don't have a sell signal on yet, quite a few of those I have right on the line. So, easy way. You don't have to watch all these. That's my job. I'll give you updates. It's great if you can follow them all. But if not, let me keep it simple. Another maybe, let's say, 2% downside in XLF should do the trick in taking a lot of these that are on the line right now, like Goldman Sachs, down through there, because birds of a feather flock together. Let me give you one additional target. This would be my first stop, about 354 for Goldman. That would be a drop of about 661. And then my next target is going to be top of that support zone, and that would be about a 16% drop down to about 332. The zone runs from about 318 to 332, give or take. And there's a if it gets ugly target right there. And then the regionals. I'm just going to loop over to the regional banks. That was XLF has your big mega financial institutions, and XLF, keep in mind, is not only banks, it's also insurance companies, all things financial. Some exchanges are in there and things like that, but this is a pure play on the regional banking sector, and I think this one's poised to fall and makes a nice objective short. Little more downside. It needs to take out this trend line right here, this minor trend line. That's KRE, by the way, is a symbol. First target 63.75. What would that mean if it gets there? About a 9% drop. And I'll have to sharpen my pencil, but more so I'm focused on a lot of these individual banks, and I'm just going through in order market cap. PNC, right on the line. A little more downside, we'll have a sell signal there. TFC already broke down. Truist Financial, I covered this the other day. There's my primary trend line. 4 red sticks in a row. That's what I like to see. This is a check mark all day long. This one is an objective short all day long. Still is. We're not too close to the first target yet. I mentioned it the other day, I believe, updated this one. But 55.24, first target 52.24. And then maybe we come all the way down here to 45.62. SVB Financial Corp, right on the line. Look at that. Any more downside, we'll have a sell signal. Pretty much a solid move below today's lows. First target 469.65. What would that mean if it gets there? That's a drop of about 22%. All right, so that's trying to, when I go over what the percentage drops are, a couple things there. If you want to take the trade, and that's your target, let's say 22%, you can use a 7% stop loss. That gives you a little better than a 3-to-1 risk reward ratio. It also lets you, if you're not going to do these individual stocks, but you're going to short KRE instead, and I'm showing you, let's say on average, my first targets are all, let's say first targets are 10%, second targets are 20%. Then you can correlate those drops with a drop in KRE as well. And a couple more. FITB, Fifth Third Bancorp, right on the line. Look at that, right there on the trend line. A little more downside, and that's a beautiful trend line. That one comes back off the March lows. I'll have to give you one. I haven't added levels to all these charts. I'll tell you there's support right there. For support, it's just right about 39, and then 35.70 or so. KeyCorp, KEY, right on trend, and then support below right around 21.92. All right, I'm going to stop it here so the video is not super long. Again, I gave you some individual ETFs. XLF is the pure play. That's the one you're going to have the most updates on. That's the actual, the big financial ETF with the big financial names like I covered earlier. And again, SKF, if you want to buy one that it's just the inverse 2 times of that, or FAZ, same thing, in 3-time inverse. I'm sorry, that's FAS, that's the bullish one. FAZ is the bearish one. And then KRE if you want to play the regional banks. XLI, I'll follow up in another video and give you some individual, setups there. You watch the same thing. You watch the big names. These are the big components. UPS, look at that rolling over pretty hard. Honeywell, already breaking down. UNP, close. Boeing. And again, I'll have to do these in a separate video, so this one doesn't go too long. All right, so again, the takeaway from this is the theory I've been working off of recently is that the S&P 500 wasn't going to break down until we see the financials and industrials. They've broken down. We're right at pretty much at all-time highs here in the S&P, and so I'm going to go out on a limb and say that's a top call for the S&P 500, at least before the next correction. And I'm going to be wrong if the financials and industrials snap back and these breakdowns don't stick. I also might be wrong if tech, which outweighs those two, all of a sudden they step in and start buying tech and it rallies. That's not what I see right now, but those are possibilities. But take it for what it's worth. Let me go ahead and wrap up here. I'll get the video out to you guys, and then if any standout setups in the financials, if I come across any that stand out, I will post those as individual charts with some individual, specific price targets and all that. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.